If you're an entrepreneur in India looking for funding, you know it can feel like trying to find your way without a map. Well, that's exactly what we're here to fix. We're going to lay out a clear roadmap for you step by step. Let's get right into it.
So you've got it, right? The big idea, the one that keeps you up at night. You've got the passion, the drive. But yeah, the bank account isn't exactly screaming, let's do this. It's a classic story, but don't worry. In this explainer, we're going to bridge that gap and show you exactly how to get the cash you need.
When you start looking for a business loan, you're basically standing at a fork in the road, and there are three main paths you can take. You've got the traditional route with banks, the super fast route with NBFCs, those are non-banking financial companies, and then the government-backed path with all sorts of schemes. Each one is totally different, so let's check them out.
Okay, this is where it gets really interesting, because it's all about trade-offs. Look at the banks. The interest rates? Pretty good, right? Lower, but they usually want collateral, something you put up as security. Now shift over to NBFCs. Their secret weapon is speed. We're talking approval in as little as 48 hours. The catch? The interest rates are going to be higher. And finally, check out the government schemes. The rates are amazing, and often you need zero collateral, which is a game changer for new businesses. The loan amounts are just a bit smaller.
So, before you even pick a path, you've got to get through the first checkpoint, eligibility. Think of these as the basic must-have requirements that pretty much every lender is going to look at. Let's make sure you're good to go.
So, the rules of the game are actually pretty straightforward. First off, you've got to be an Indian citizen somewhere between 21 and 65 years old. And your business? It can't just be an idea on a napkin. It needs to have been up and running for at least a year with an annual turnover of 5 lakh rupees or more. That basically tells them, hey, this is a real working business.
All right, let's talk about the big one, the number that can literally make or break your application, your CIBIL score. Seriously, think of it as your financial report card. It's this 3-digit score that just screams to lenders how trustworthy you are with credit. You absolutely need a score of at least 650. Why? Well, that's kind of the industry's line in the sand. Anything below that, and they start to see you as a bit of a risk.
And this slide really nails a key difference between your options. You see, banks are traditional. They're cautious, so they often want to see that your business has been running for at least 2 years. They want that proven track record. But NBFCs, they're usually a lot more flexible. They might be totally cool with a business that's only 6 months old, which can be a huge help for newer companies.
Okay, you've passed the eligibility checkpoint. Awesome. Now it's time to pack your bag for the journey. And a successful trip is all about having your paperwork in perfect order. So let's run through exactly what you're going to need. First things first, you've got to prove you are who you say you are and that your business is legit. This means your basic personal IDs, like your PAN and Aadhaar cards. But you also need the business's official papers, your GST certificate, your Udyam Registration, that's what officially makes you a small business, and any local trade licenses. You can think of these as your business's ID card and birth certificate.
Okay, next up, the money stuff. You have to prove your business is financially healthy and actually exists somewhere. This is where you'll need your bank statements, your income tax returns, and your profit and loss statements. You'll also need that solid business plan we talked about, plus proof of where you work, like your rent agreement or property documents.
And hey, just a quick heads up here, if you're aiming for one of those government schemes, a simple business plan won't cut it. They require a super detailed project report. We're talking cash flow projections, market analysis, the whole shebang. And you have to upload it directly to their official website.
With your document kit all packed and ready, you're finally prepared for the journey itself, the application. Let's walk through the exact steps, whether you're dealing with private lenders or government schemes.
For banks and NBFCs, the process is pretty streamlined these days. You'll probably start online, on their website or app. You upload all those documents we just went over, and then you just wait for verification. This part usually involves them running a credit check, and sometimes they'll send someone to actually visit your business. If everything checks out, boom, the money lands in your account.
Now, the government route is a little different. It all starts with getting that Udyam registration, which, by the way, is totally free. Then you apply through a special government website where you'll attach that very detailed project report. And your application doesn't just go to one person. It's reviewed by a whole district committee, which, you guessed it, can take a bit longer.
You've navigated the whole process, and you're so close to the finish line. But to make sure you actually get there, let's cover a few crucial tips, and the one huge mistake that trips almost everyone up.
You want to know the real secret to getting approved? Go above and beyond the minimum. Don't just aim for a 650 CIBIL score. Shoot for 700 or higher to really impress them. Don't just have a bank account. Show them a healthy, consistent cash flow for at least half a year. And make sure that business plan isn't just a fantasy. It needs to be realistic and backed up with actual data.
And this really just hits the nail on the head. Lenders see tons of great ideas every single day. The ones that actually get the money, they're the ones that have a perfectly prepared application.
And if you need proof, just look at this number. A wild 70% of all loan rejections boil down to one simple thing: incomplete or wrong paperwork. It's not usually the business idea that fails them, it's the prep work. Being meticulous is everything.
So there you have it. The different routes, the checkpoints you have to pass, the gear you need to pack, and the pro tips for a successful journey. The entire map is right here, in your hands. The only question left is, which path are you going to take to fund that dream?